Hey, what's up, everybody? Hopefully, everybody's having a great weekend and a rocking week as well on the previous volatility. But today, let's just break down these futures really quick and check out what the market has as for us this week, right? So, I think a few things here just to start with is /ES. You guys know that I always come up on here, and I want to show you guys the weekly charts for a lot of the futures. And just to give you an idea as to how I go through this and how I prepare myself for next week. And it's going to be broken down in two videos. So we're going to have this video for the market breakdown. And then I'm going to give you a video for the list of tickers that we are watching for the week and how to, spot those reversals. There was a previous video too on how to, what to look for in 2022, this year, this new year. And it's going to be a lot of innovation, a lot of things that are looking for guidance and just good positive news on all those tickers that have dropped in like lower than 52-week low sometimes for some of those things like SQ, ZM, Roku, Snap, Twitter. I mean, you name them. There's tons out there, right? But I'm just giving you guys the ones that a lot of people already know of, and everybody's aware of them, and they're very liquid stocks, right? So the one thing here that I do want to talk about is the weekly charts. Okay, the weekly charts are very important to understand because this is what what entails the S&P 500, which is /ES. SPY is the one that follows it. So there's no need to chart the ETF. All you got to do is come look at the /ES, which is the future for SPY, and don't worry about what SPY does. SPY has a lot of gaps. ES does not. So that's the difference. Okay. And there's a lot more, but we're just going to get down to it. What I want to point out to you guys is this weekly chart that a lot of people called a rising wedge. Okay, there's a lot of talk that this was here, and I don't know what the line they had here, called it a rising wedge or whatever, and then it finally broke. Okay, cool. What happens when something breaks? It actually breaks trend and it continues a new one, but that's not always true. What happens here is that there's a process in between a broken trend. All right, so I'm just going to give you an example. I'm going to put that line back up just so you can see. What you see here is the break of it, and then what comes next? What is the natural thing that when a pattern breaks, what comes next? The retest. Okay, everybody expects the retest. So there are three different types of traders here. Okay, let me just give you the example. The first one is the one that's getting the momentum and he's just selling into strength right away, and he's going to get out as soon as that breaks. All right. The second trader is the one that's going to come and follow it all the way for the retest, and he's going to start buying these dips and he's going to start selling here. The other trader is the one that's going to get the retest for the continuation of the pattern, meaning that he's going to grab it and he's going to want to drive it all the way back down for the continuation of the trend, because that's what naturally happens when a pattern breaks. All right. That's the process of something that breaks, and whether it's a rising wedge, a trend line, a bull flag, whatever you want, that's what happens. You break of a trend, you drop down, you come back up and you retest, and then from there on that retest, we either reject or keep on going, whichever one. So it's just depending on what type of trader you are, then that's the type of trade that you're going to be taking and you're going to be waiting for. So quick breakdown on ES and why it broke down. And also there's a lot of supply up here that was built. Okay, so here's your supply right there, just to show you all these multiple candles on the weekly time frame, and we literally just broke to the downside. So there's a lot of negativity. There's a lot of bearish talk out there in the markets. Everybody's posting YouTube videos and saying that there's going to be this crash, and then there's inflation. There's some news going on with Russia and Ukraine. And there's just so much going on with interest rate hikes. And then we have a mixture of earnings, as you guys can see. Like if you guys look on this side, all these right here still have earnings coming up. You see that that blue light bulb, and then the that red circle right here to your left on this watch list. There's a lot of stocks that have earnings coming up soon, and That's what drives a lot of the volatility in the market. The volatility because you have a mixture of people buying and selling whatever stock that is that's probably coming in, getting close to earnings. Not only earnings, but people are buying some up and people are selling some, like Netflix. To give you the example, that Netflix did drop all the way down to this like 350 level, from this like 600, 550, 700 level. While there are other ones that did beat earnings, and then they have these nice green candles, which was Apple, and I'm sure everybody is aware of. So there's a mixture of a lot of things happening here, guys. And I know everybody says that this market is always the same, but it's never the same. It's always different. There's always something new. The movements are always different. The reactions are going to be different, but the reaction for you as a trader must be the one and the same. Entry, stop loss, take profit. Very simple, but yet hard to do just because there's a lot of emotions behind everything. And behind those emotions, there's a lot of volatility. But you can see here that on this weekly time frame, there's a huge wick on the bottom with an intense amount of volume coming in and giving this market a nice strong push, right? So these wicks here, based on price action in the past, it has been getting bought up at these levels in the past, right? So now that you see this, let me put a trend line right here on the bottom of these candle bodies, and let me put one down here at the bottom of this wick right here, okay? So I'm going to show you guys what this really is. So remember those two trend lines here. Matter of fact, let me do this. I'm just going to color coordinate, so when you guys look at my 4-hour chart, you're going to know exactly what I mean. So what this is doing here, and what this is telling us now, is that the wick is a significant sign of buyers coming into the market. When you see a huge red candle like this, it's just a strong significance that there was a lot of sellers here once it started dropping, and that's okay. All right, that's normal. The next candle is always going to be red or green, and whether you get stuck with a red one or a green one, the reaction is going to come into the next one, and that's the trend that we're going to be taking. We're day traders for a reason. We're in and out of these positions. We're not here to predict the future and say that this wedge is going to break down, so I'm going to grab a 2500 put down here, and this market is just going to keep on crashing. We can't do that. We got to remember that we're following the trend, and the price action is still going to come and play. So now I'm going to go on the 4-hour. As you can see, let me take this off. Look where all the buyers stepped in at one point. Okay. And if you watch the previous video, this is kind of what I talked about as well. All right. So the buyer stepped in, 1, 2, 3, 4 times the buyer stepped in down here. And then we made these all-time highs. Well, we're back down at this level again. And look what we're doing again. Okay. Every time we drop down here below these purple lines, right, these 2 purple lines, the market keeps getting bought up. Okay, no matter what's going on out there, no matter the fear, no matter the fact that we broke down from this wedge pattern that everybody was talking about. And I know there's war tensions, and there's inflation, and there's a FOMC. There's all kinds of stuff happening, but yet the buyers are showing up down here. I'm not saying that this is the bottom of the market, okay? But if that's what you want to, take it as, by all means. But play the trend no matter what happens, and understand exactly what's happening before you start to get into a bias and saying that this market is going to keep on crashing. So technically, we haven't crashed. All right, I think we hit like a 10% drop, and I think it was a 20% drop for the NQ, and we're kind of in this correction mode as well. But we're not crashing. All right. The way that everybody sees it is that this market is going to drop, and we have like a huge target of way down here, right, which is not impossible to happen. But as you can see, based on the price action this previous week, there's still buyers in this market, and there's still people holding up the bullish sentiment here. All we're doing is we're just going to go sideways for a bit, and that's healthy. Okay, so what this is actually doing, if you look at the 4-hour time frame, this is a drop, and then here's your base now. Okay, what I want to point out is the bases are accumulation that can build demand. The demand, once this breaks out to the top right here, is 44.26, 44.30, 42.50, sorry, 44.50, then we're probably going to continue right back on up, and it's like nothing ever happened. So this is why I always say that it's always better to buy the dips, because your reward is amazing and your risk is right here. Literally, like a $2 move to the downside of a stop loss when when you have like $100 move to the top. So everything just makes more sense down here at these bottoms. If you're catching these falling knives, but again, if that's not you, don't worry about it. You should be the one that's buying the breakout to get a little more confirmation, or whatever it is that you're waiting for, whatever indicator, whatever crossover, whatever divergence you're waiting for. If that's something that you're going to be waiting for, then by all means, go ahead and wait for that. Okay. But don't sit there and try to get biased on something that is not really there yet. Okay. So until this breaks, we're still bullish in the market. We're still holding on to the demand that's being built here on /ES, and just in general in the market with everything that's going on, unless we go to war. And I really hope we don't go to war. But again, it's just, well, there's nothing that we can do other than trade the trend and protect ourselves, right? So with /ES, what I want you guys to see here is that we are trading sideways. Okay, so over this candle body right here. All right, what price level is that? So 44.26. If you want to feel more comfortable, do it around 44.46 and go long. These are your two levels to go long. All right. In between, you want to use this piece right here, 43.50, as a support. Once we're below this, start thinking, down here, if we start breaking down to the bottom and continue more with volume, then by all means, we're going to be bearish and start thinking bearish. Once we're up here and we start building some more candle bodies, we trade a little sideways. Maybe we build like a pennant, a little bull flag, something like this, where, the market just trends down on Monday, and then come Tuesday, and then we break above Wednesday, Thursday, and Friday. However it may be, whatever it does, look for a pattern. I think whenever we build these ranges, these bases, it's better to look for a pattern to give us a reason to push above, break above, and then, keep on trending and build a nice staircase pattern to the top. And then just look for those all-time highs, in the near future, next couple of weeks or so. It's been a rough month, guys, and this month is almost over, and we're looking for a little more hope in the market. And Apple was the one that, gave us that hope for earnings, which was amazing. And Friday, we just had the strongest close probably since we had, since the beginning of the month. So this is one of the strongest close we've had in, like I said, in about 30 days since the new year started. So look out for maybe a pattern and some hope in the market, right? I know it sounds crazy saying hope, but this is what happens when we get a little hope. The hope behind it is, what I'm saying is, not hoping that, like, hey, I'm going to bag hold my position and hope that it goes up. No, not like that. I'm talking about the sentiment that's going to come in with Amazon, Google, PayPal, Snap, AMD, Qualcomm. A lot of these tickers have earnings this week, and these are heavy hitters for the market, which is going to drive the sentiment. And that's the hope that I'm talking about. The hope that Apple gave on Friday, to be bullish, it gave a market sentiment a nice bullish day. So if that can continue, there's a strong possibility and probability that Amazon will give that strong hope as well. If it beats over this 2,900, it'll probably go to this 3050, right? Sorry, this 3K right here, right there, and then give us a strong earnings report. And then honestly, if we can just wake up way up here for Amazon, that would be great, right? You guys know how earnings are. These things move like crazy. Amazon doesn't move $10. It doesn't move $5. This thing moves by the hundreds. And as you can see right here, we have a long ways back to the top, and Amazon's beat down. So I think if Amazon can give us a good, strong earnings for the week, along with Google as well, we can definitely see some more upside and some hope in the market, knowing that everything is going to be okay in the near future. And that's what's going to bring in a lot of bulls to the market. So that's kind of what we're expecting this week, right? Things like PayPal has earnings too. This thing's beaten down so bad. Starbucks has earnings this week. I believe Snap has it as well, and Facebook. So we have three of the biggest heavy hitters: Amazon, Google, and Facebook. So far, Microsoft was amazing. Netflix was beat down, but that's kind of normal just because it's subscriber based, and a lot of people, are done with COVID, so the numbers are not that great, and people are trying to save money, so it's not a surprise that this happened to Netflix. Okay, it would have been more a surprise if they would have beat and they would have gained subscribers. But this one was not a huge surprise. If you guys did some DD on that, you would understand what I'm talking about. But yeah, this is kind of like the hope that I'm looking for this week. I think the market's going to be okay, guys. I don't think there's any reason to panic or to worry about like where we're going to go or what's going to happen. If you're a day trader, you should worry about trading the this base. Buy a put at the top, stop loss right up top, and then write it down. Buy a call at the bottom, write it all the way back up. Right? Keep it simple. You know now that it's a base and there's nothing else to it. All right. Now, unless this thing starts dropping, then your put levels are way down here, the 42.57 or just 42.50 psychologically. It's probably going to continue more to the downside. And then we'll consider this as a drop-based drop. And then we'll start having some bearish conversations. But until then, look for the market to start reversing just a bit more. And, even just to hold this trend, the longer the sideways movement, the better it is, guys. All right. So don't panic. All right. So that's a quick breakdown on ES and my thoughts. And it's almost the same thing with a lot of these futures, guys. Here is going to be your long trigger for NQ to confirm. All right, 145.37. This is the top of this. If you are somebody who likes safer trades and doesn't trust the market, then you would do it over this wick right here, which is your 146.35. All right. Otherwise, use this right here as a base, as a support, which is your 141.70. And then 141.06. So this is your little supports where we're going to probably bounce if we do drop. This would be the area to buy the dip and to ride it back up. Otherwise, look for sideways movement still. We haven't broken out yet. There's nothing that says we're going to be bullish. Otherwise, we're still waiting for that sentiment of earnings. All right. Now, the other one is going to be RTY. You guys know, I hope you guys remember this and how much I stressed the fact that this was going to be a huge break, right? Look at this. This is the levels that I gave you guys, weeks ago. Like from when I started making these YouTube videos. If you guys don't know, I am Chef, and I am in CC. And you guys should know me by now that this is the one ticker that I've been telling you guys about the breakouts. Last time I caught the top side, when this thing broke right here, I actually got in for the swing and rode it all the way to this top and then tried to catch this dip right here and got stopped out. So made a lot of money to the top side, but then got stopped out on the retest. But that's okay. And then I bought these dips down here as well and then made money on the way up. But then here, I never played the put side. I told you guys in the past that I am not somebody who likes to play the put side. But this is definitely a great one that broke trend, and this should have made you feel 100% comfortable knowing that it was breaking down to keep on playing puts to this. This finally broke after a whole year of being in range. And I can almost guarantee that a lot of you probably did not play this to the downside. I am not here to play puts, guys. I will definitely wait for the call side. I will wait for the reversals. That's just what I do. That's my preference, but I can definitely see something when something is breaking to the downside. And that's when I'll take a step back and not trade as much, right? It's quality over quantity. The type of setups that make sense for you, then that's the stuff that you take as a trader. You don't always have to take everything that everybody is trying to trade, because then that would be over trading, that would be FOMO, that would be chasing, that would be you having no structure whatsoever. So I waited here, and I'm still waiting for the dips here to come back up for RTY. Once we start getting back up here, then I'll start trading calls again. Otherwise, it's still on a downtrend and it's still breaking down. So, but just like everything else, everything needs a retest. So getting that retest would be pretty nice, as the market can just continue back to the top. I should be okay. But for now, we just play the trend on RTY. I personally don't think I would go long for any day trades unless we get over the psychological number, which is the 2K, and then to the 2050. Okay. So from the 2K all the way to the 2050, that's where I would play long like this. And then, of course, all my others would be over here for the 21 for the retest, right? Small caps are getting beat down, guys. If you guys don't know why, it's because of the interest rates that are affecting a lot of businesses. They will affect smaller businesses in the long term. And it's, of course, the pattern broke. This is the Dow. Okay, I want to show you guys. This is the only one that really didn't break trend. Look at that. Held while everything else just broke. The Dow is still holding strong. So make sure you guys follow some of those tickers in the Dow. I'm sure you guys can go do some research on that, do some DD, and figure out what kind of tickers you're going to be trading, right? So futures are still healthy, and everything's looking fine. Now, gold is the one thing that I want to bring up as well, because you guys do know that we have potentials of war breaking out. I really hope it doesn't. Again, using a word that I shouldn't, but that's kind of like a good word, good word to use in these times where we really don't want war to, happen in this world. Don't wish that upon anybody, and we definitely don't want to go through that again. Gold is something more of a safer asset, and if something bad happens, I want to see what happens to gold, because if it's more of a safe asset, usually a lot of investors out there and firms, they like to get into gold just to be safe with their portfolios and manage them. So if this thing is still base, guys, so over it is 1850 psychologically, I think we'll continue a new trend. But until then, this thing is holding range. And if please be alert, next time you hear anything about the war, and let's just say we do go to war, come and watch gold. This would probably be something that's probably going to shoot up along with silver. Okay, SLV. Let it just load. Yeah, SLV. So right here is kind of like a little support, but definitely some great assets to be looking for. Okay. Okay. So let's look at the VIX. The VIX is the volatility index. You can't chart this. Anybody who is out there charting it probably has no idea what they're doing. I look for characteristics. As you can see, we go through this every single time. I want to show you guys exactly what's happening here with the VIX. This was COVID. This was the recovery in the market. Okay. Hopefully you guys understand it. Every time this market pulled back, there was some type of fear. And then look what happened next. Okay. Green and then red. Green, red. Same thing. You guys see the patterns? Okay. Same thing is happening here. The volatility got a little bit crazy. We're getting a little out of hand there. But again, it's happening. Look at this. Here's your pump. Here's your dump. Here's your more pump. And then look at the results of that one candle. Strong wick on the top. Why? Because the volatility cooled off. At the same time, the market is building a base. Okay, so if you compare these two tickers, well, I definitely can't do that here. If you put them side by side, and you compare the ES, you'll see that this candle is very similar to the volatility from this week, meaning that there's not a lot of people here and there's not a lot of fear in the market, and meaning that because there's not a lot of fear, there's a lot more buyers down at the bottom. So you're correlating the VIX, the fear, and the market. The market is still being bought up at these bottoms. No matter what's happening in the world out there, no matter how bad the news is, no matter the correction that we had, like a 10% correction and 20% on the NQ and the VIX, everything is still showing us that everything about the characteristics on the VIX is playing out the way that it should. So if this continues to play the way that it should, the VIX should drop in the next 2 to 3 weeks. Those are the next 3 red candles that you're going to see. And the next candles on /ES, if this trend continues, this will be the next 2 to 3 week green candles being solid green and coming back up to these highs. Now, again, I'm not here to tell you guys that I'm calling the bottom, okay? Because this can play out a whole different way. But I am here to show you what these charts are telling you. As you guys can see, sorry if that kind of hurts your headphones, but that was the alert for /ES, and the market's open right now. The futures are, and it just kind of like broke above. So sorry if that kind of hurt you. That kind of hurt me, but that's okay. So yeah, I'm here to show you guys what the charts are saying. I'm not here to show you guys or scare you guys and or give you some type of hope that, you know, this is the bottom of the market and we're not going to come crashing. Always be aware of what's happening. All right. It's very important to understand what you're coming up against and what the characteristics are in the market and what you have in front of you and the tools that you have in order to be successful and to understand everything around you, not just one little piece or one little bias. Okay. Because the market can turn around at any point in time. All right. But again, I'm here to tell you that you can't chart the VIX, and don't come over here saying that, hey, we're going to hit this 85.47. All right. Please. If you're somebody saying that, you should walk away from them. Okay. But again, your choice on who you decide to be around with. So yeah, I want to show you guys that. And another thing to be aware of, guys, the bonds, TNX, if you guys don't know, make sure that you guys are watching this because it affects tech. And every time this thing, you know, makes new highs, there's potential that tech drops down. So keep that as another tool that you guys can use for the market that can help you moving forward, of course, and stay alert. Do some DD on this. I'm not going to give you too much information on it because I want you guys to go do some research, do some homework on what the bonds are and how they correlate with the market. Okay. I'm not here to give you guys a full breakdown of the bonds, but definitely have it on your watch list and understand what's going on, please, because it does affect tech. All right. As for oil, you guys know 4/CL. Last time we talked about it was way down here. And we did say that if it's going to drop, it's going to drop below this yellow box here. And then just trending back up to these all-time highs. But there's nothing wrong with oil right now, guys. Gas prices are actually, you know, going through the roof. I think I paid almost $100 just to put gas in my little Mercedes. And it's just insane how the prices are rising everywhere. But inflation is real, guys. And, you know, we do need gas. We do need oil. So everything is still rising, and it's just pushing. You can't fight this trend. You can't fight the demand for this. All right. So far, there is no supply yet, and everything is just nice staircase pattern, as you can see here. Every week there's something good about 4/CL, which is oil, right? Light sweet crude oil futures, if you guys don't know. And stay alert on this too. When this is showing some healthiness as well, usually it helps the market stay green, and it helps the market in all kinds of ways. So be aware of that too. All right. So, but yeah, that's all I got for you guys for a market breakdown. Remember, guys, that there's a lot of volatility, there's a lot of war stuff going on. There's earnings coming up. There's a lot of stocks that are 52-week lows. The market is healthy. There's a base being built right now, accumulation phase in the markets on 4/ES and NQ. And there is a break of pattern on RTY, which is the Russell small caps. But that's nothing new. Understand why. Gold still basing out. 4/CL oil is still trending up nice, and the bonds are, you know, increasing, and the VIX characteristics are showing now. So remember that, guys. All right. Be aware of everything that's happening. Understand the futures. Understand the markets, and let's look for a good watch list. All right. So I'll leave you guys with this one. This is just me breaking down the futures, the market just in general for you guys, so you can get a good understanding of what's to come. And then with all this broken down, we're going to come up with some tickers that may be looking for reversals, and we're just going to look at some proper levels for you guys to, you know, make some money this week. All right. So I'll see you on the next one. Stay green. Please manage your risk, guys, and do some due diligence on TNX, which is the bonds. All right. And I'll see you on the next one.